Have you ever wondered why some Australians own just one investment property, while a tiny, almost invisible group quietly builds fortunes worth tens of millions of dollars? Well, welcome to this explainer. Today, we're unpacking exactly why a microscopic fraction of Australians control a massive share of the country's investment properties. We're going to look at the data, break down the hierarchy, and see exactly what it takes to climb to the very top. Get this. According to recent research, only around 0.07% of Australians ever reach the absolute highest tier of property ownership. Just think about that for a second. In a country that is absolutely obsessed with real estate, where millions buy into the market, less than 0.1% actually make it to the summit. They don't just participate in the market, they control a surprisingly huge share of it.
So what exactly separates them from everyone else, right? Is it simply having a much higher income to begin with? Is it incredibly lucky timing, buying up entire blocks decades ago? Or do these top-tier investors fundamentally know something the average person doesn't? Well, as we'll see, reaching that peak is definitely not random.
Let's dive right into the breakdown. We'll be covering the 0.07% club, the 5 wealth levels, strategies versus mistakes, markets and tax rules, and finally, the mogul mindset shift. First up, the 0.07% club. You see, there's a massive gap in the market. The vast majority of Australian investors are just everyday people who own one single investment property. But jump over to the complete opposite end of the spectrum, and you have that 0.07%. Despite being such a microscopically small group of individuals, they control a disproportionately massive share of all investment properties. It's literally the difference between dipping a toe in the water and, well, owning the entire pool.
Next, Section 2, the 5 wealth levels.
So it turns out there are 5 distinct levels of property wealth in Australia. Think of it kind of like a ladder you have to climb. I mean, nobody just starts at the top, right? You begin at step 1 as an accidental landlord. Then, if you get intentional, you progress to a novice investor at step 2, actively buying your first purposeful rental. Step 3 is the intermediate builder, where you learn to duplicate that success and build a small portfolio. At step 4, you evolve into an advanced strategist, mastering sophisticated finance and market cycles. And finally, if you nail all of that, you reach step 5, the elite property mogul.
Let's take a closer look at that very baseline, the accidental landlord. This is an investor at the very first level who typically owns just a single rental property. They really haven't optimized for wealth building at all. Maybe they just couldn't bear to let go of their old bachelor pad when they upgraded to a family home. Or maybe they bought one place purely to offset taxes because their accountant told them to. They're technically in the game, sure, but they aren't strategically driving their wealth forward.
Now contrast that baseline with the absolute top of the ladder. Elite property moguls at step 5 don't just own a couple of houses down the street. No, they deliberately manage sprawling, multi-million-dollar portfolios strategically spread out across several states. They're diversified, they mitigate risk like pros, and they operate their property holdings not as some weekend side hustle, but as a high-level, highly sophisticated business.
Moving on to Section 3, strategies versus mistakes. Climbing from level 1 all the way to level 5 requires a really specific dual approach. First, you've got to utilize proven, deliberate investment strategies. Stuff like safely extracting equity from your first property to fund your next deposit, instead of painfully saving up from scratch every single time. But honestly, it is equally important to strictly avoid the common mistakes that trap everyday investors. Things like cross-collateralizing all your loans with one single bank, or buying based on emotion instead of hard data. Making the wrong move, or even just failing to act because you're scared, is exactly why the vast majority never make it past property number 1.
Section 4.
Markets and tax rules.
Of course, it's not all just about your personal choices. Every single investor has to navigate external hurdles out there in the real world. We're talking about constantly changing property market conditions. Riding out localized booms, surviving the busts, and spotting those undervalued regions right before they surge. And alongside all that, Australia's tax landscape is continually shifting, from debates around negative gearing benefits to navigating incredibly complex land tax thresholds. These external forces are fundamentally reshaping the path to long-term wealth. The elite 0.07%, they anticipate and adapt to these changes, while lower-level investors usually just get blindsided by them.
Finally, Section 5. The Mogul Mindset Shift. Now we arrive at the final and probably most crucial piece of the puzzle. The research reveals a really fascinating truth. The biggest surprise isn't actually how much money these investors make. It's how completely differently they think about building long-term wealth. The ultimate secret separating the elite isn't a massive starting salary. It's a fundamental shift in mindset. They view property not as some get-rich-quick scheme, but as a multi-decade chess game. They focus on compounding growth, delayed gratification, and strategic leverage in a way that simply doesn't even occur to the accidental landlord.
So as we wrap up this explainer, I want you to ask yourself a serious question. Where do you currently stand, and what is it going to take to climb to the next level? Whether you already own an investment property and relate a little too perfectly to the accidental landlord, or you're still dreaming about buying your very first one, reflect on those 5 levels. What mindset shifts and what strategic actions do you need to adopt today to break away from the majority? The ladder to the 0.07% is standing right in front of you, but what are you going to do to take that very first step?